All right, so good morning once again, and we want to turn our attention to IAS 24, which is related party transaction. So we're looking at related parties. So like we do, we need to define the concept. So let's look at definition. Now, let's start from somewhere. We first want to look at a related person or an entity. So first of all, we say that when a person or an entity is said to be in a related party relationship when that person or the entity is related to the entity preparing its financial statement. So a person is said to be in a related party relationship with another entity when that person or the entity is related to the entity that is reporting the financial statement. So we call these ones the reporting entity. All right. So are you related to the reporting entity? So that is the question. So therefore, a related party transaction. So now we look at a related party transaction. So a related party transaction, therefore, is defined as the transfer of resources. So when you transfer resources, transfer of services, or the transfer of obligations, that's a liability, okay, between related parties. So related parties are those that are related to the reporting entity. So if there's a transfer of resources, service obligation between related parties, all right, regardless of whether a price is charged or not. Well, that part is very important. Regardless of whether a price is charged, all right, or not. So you don't need a price to actually say that they are in a related party relationship. But any transaction that happens between those related parties, regardless of whether a price is charged or not, all right, is a related party transaction. But you see, the related party transaction is a normal feature in every business. There is nothing wrong with any related party transaction. However, there has to be a disclosure. So the key issue here is that this standard is a disclosure standard. So there has to be what? A disclosure. A disclosure has to be made. That is where the issue is. So if the disclosure is not made, then it's against the concept of IAS 2024. Why? Because if the disclosure is not made, it distorts the financial understanding. It distorts the financial performance and the financial position presentation. Because if the user is not made aware of certain disclosures, it means that he has not been given the opportunity to see certain aspects of the performance of the entity and the position of the entity. So therefore, it is very important that related party is what transaction is what disclosed. Because if, let's say, an entity A and entity B are in a related party transaction, then B has sold so let's say A and B are in a related party transaction. So A sells to B, but you see, if A were to sell to C, which he has no related party with, he will be selling the thing at 250. Okay, but because he's in a related party to B, the transaction is sold at, let's say, 200 Ghana cedis. What does that mean? It tells you that the sales of A will reduce, but you see, it only reduce probably because they are selling toward a related party. So a disclosure has to be made that that part of that sale were made with a related party, so that the users of financial accounting information can actually understand and also draw some conclusion when it comes to them making the decision in investing for the company. Because other than that, you would think that the company is not performing well. But for all you know, they are doing what we call income splitting. All right. So it has to be disclosed so that proper understanding can be deduced from the financial statement. Now, the next thing I'm going to do is to talk about some related party relationships. All right, because you have to be able to spot the related party relationship. Be able to spot the related party relationship. When a question comes, you are able to say, this one is covered under IAS 24. So my next attention will be trying to give examples of a related party relationship. Related party relationship. All right, so let's look at some of them. The first one that I'll be looking at is centered on a person. So now we say that a person or a close member, i.e., let's say a family member, all right, so we say a person or a close member of that person's family, all right, is related to a reporting entity. So what do we mean by this? If I am related to a reporting entity, or a close member of mine is related to a reporting entity, a reporting entity where I have control, all right, where that person's or that member of that person's family has what? A control. So if he is just related without control, you pause on first, all right, that has control, or what we call a joint control. A joint control. Because just a family association doesn't mean a related party. Here we are talking about where that person has what? Control or a joint control of the reporting entity. Of the reporting entity. Do they have control or a joint control on the reporting entity? If yes, then it is what? A related parties transaction. Not just control. We know in consolidation, we say control is more than what? Greater than 50% in consolidation. That is what we talk about as control. But here too, there is joint control, so it can be 50-50. All right. Then we also talk about the fact that if that person or the family member of that person has significant influence, All right. Do they have significant influence? Significant influence of the reporting entity. So the same thing of the reporting entity. Do they have the same influence? Significant influence means that the person has less than 50%, but he plays a major role in the entity. So, I mean, I always say that a marriage relationship is a control or a joint control relationship. Then normal dating, what we call relationship, in a relationship with this, that one you have a significant influence. So it means that you can say certain things and it can yield an influence into the other party's life. So do you have control? Apart from the control, do you have a joint control? Aside that, those people we are talking about, do they have significant influence? All right. Then we come to the third thing. And in the third thing, we are looking at whether the person or a close member of that person, all right, is related to the reporting entity. And how is the relationship? Maybe it's because that member is a member of the key management personnel. It's a key management personnel. Of the reporting entity or a parent of the reporting entity. All right. So that is that. Now let's pay our attention to entities. Let's pay our attention to entities. Now, when it comes to an entity, I'm going to use a table or a graph to illustrate it. Okay. So let me draw my graph. So I have in here the reporting entity. So any relationship will be in connection with that reporting entity. So therefore, we say that if an entity is a parent of the reporting entity, then there is related party transaction. All right. So if you are the parent and you have a relationship with the reporting entity, there is a related party. Why? Because of control. Because of control. So the entity has that. Not only that, let's talk about an entity that is a fellow subsidiary. Are you a fellow subsidiary of the reporting entity? If you are, then it means that you guys are together because you are all controlled together by a parent. All right. So if if the two of you are fellow subsidiaries, then it means there is a related party. Not only that, let's talk about a joint venture. So if the two entities have a joint venture arrangement between them, then it means that they are also in what? Related party transaction. Why? Because there's a joint control. Okay. Another one is when you are an associate. So an associate to is a related party transaction. Why? Because there is significant influence. All right, so that is that. Again, we talk of key management personnel. Are you a key management personnel of the reporting entity? So we're talking about key management personnel. When we talk about key management personnel, our focus can be directed to, are you a member of the board of directors? We can actually make our focus to that. All right, a key management personnel, meaning that you are in management, a person. All right, so, and here you must be careful, because even if the person is not a key management personnel and his family member, close family member is, it is still a related party transaction. All right, a close member of someone who is in a key management personnel, it is the same thing. All right, so bear in mind that. Again, you see, sometimes what will happen is that there is a key management personnel who is from the parent entity. This one, so a key management personnel have had a situation of practice whereby there is a relationship between a parent and a subsidiary like this. Then inside this subsidiary, the person who is chairing the board of this subsidiary is actually, the person who is the CEO of this reporting entity is actually part of the board of the parent. So it tells you that there is a clear what related party. So you could see the way I've drawn the graph. Okay, it can be direct, it can be what? Indirect. All right, so that is that. The last part I want to also add here, I'm looking at IAS 19, employee benefit. So we are looking at any form of post-employment plan. Now, in employee benefit, you realize that there can be an asset management company. Just as in Ghana here, for example, you have tier 2. All right, you pay it, your employee benefit, you have one with Senate, you have one with what? Your tier 2, your private pension manager. Now, if the private pension manager is actually related to the reporting entity, in Ghana, for example, I don't know if you have heard of, let's say, Star Life. This is for academic discussion anyway. So the demonstration is done on the screen. So that is it. You can see from the demonstrations that are on your screen. This is the graph that I'm talking about for entities. All right. This is the graph that I'm talking about for entities. Okay. So for entities, this is what you are seeing. All right. I realized that I had paused screen sharing and I was continuing, but this is the graph that you are seeing. So you have a parent having a relationship with a reporting entity. It is a related party. Any transaction with them is a related party transaction. Why? Because of what? Control. A fellow subsidiary with a reporting entity. Why? Because you are all under, both of you are under control. All right. So that is that. If you are in a joint venture relationship with a reporting entity, it's the same thing. There is a related party transaction. All right. Take note of that. A key management personnel. So a director of a company is related to the company. So there is a related party transaction between them. All right, between them. So even if they are paying bonus, even if they are doing anything, it is a related party transaction. We will come to what you are actually supposed to disclose. Then you realize why some CEOs and some directors of a company, their salaries are made known and disclosed. Sometimes people think it is personal. It is not personal. It is not personal. All right. So basically, that is that. So it must be disclosed for people who are interested, for stakeholders. All right. It must be disclosed. That is why it is done. All right. Then we talk about the fact that this is the example I was trying to give. Okay, before that, we have associates. All right, if you are associate, why? Because there is significant influence. All right, so that is that. Then we spoke of the someone who is in the parent company, who is holding a key management in the reporting entity. So it's that one too also signifies a major related party transaction. In fact, even if a close member of a key management personnel is related, it is also a related party transaction. So bear in mind. So I was citing an example that a person who works in Starlight, all right, is a board member of, let's say, Starlight, but also is having a key management. Let's say he is a board member here in Starlight. Then what other company of Starlight? I think they have Star FM or something. So let's say Star FM. And the person who is the board, a member of this board here, when you come to Star FM, he will be, let's say, the managing director. In that case, any transaction between Star Life and Star FM is a related party transaction because a key management personnel is present in both. All right, so that is it. Then I was talking about post-employment benefit. Now, post-employment benefit, again, Star Life, Star FM. Star FM is a radio station, right? And Star Life is a pension management. So if Star Life is the one holding the pension for Star FM, it means that IAS 19 component of this transaction is a related party transaction because the pensions of Star Life is managed by, the pensions of Star FM is managed by Star Life. And Star Life is an investment entity for the Star Group. All right, so it makes it still a related party transaction. All right, so please kindly take note of that. Even when you have a joint venture with a third party, it's even a related party transaction. Now, let me sound this caution because the standard IAS 24 makes it clear that these people, the statement I'm about to make doesn't communicate a related party. Not all transactions communicate a related party. So the following that I'm coming to mention should not be considered as a related party. All right, the following should not be considered as related party. Now, first one is two entities. Two entities cannot be considered a related party just because they have a director or a member of key management personnel in common. Just because of that. You see, you saw what I did here, that there is a key management personnel in common between these two firms, but it doesn't connote what? Related party. Why? Because if it does, for this example when I did, if it does, then it means that that person must be in control. So just because they share a director doesn't mean the director must be what? Having control. So two entities are not related. Star Life and Star FM are not related just because they share a common director. But you see, the key is that the director has significant influence. He's doing something. Because the director, if he is here, so that is why I call this one what? A managing director. Since he's managing the company. If he is the one managing the company and he's also here, then it means that it's a related party. But just because they share a director doesn't mean they are related party transaction. The director must be doing something. So the following are not considered as related parties. So, like I said, so the director must be doing something. But just because they share a director, of course, you can have a director, or you will be a secretary. A secretary who is part of the board of directors is just taking records. So be careful of that. This part of the standard has to be communicated because your examiner is very wise. All right. So take note of that. So I'll be writing them. Number one, I said that what? Two entities, just because they share a director, all right, just because they share a director or any other key management personnel in common is not a related party transaction. All right, but so the focus is that the director must be performing something. Must be performing something. So the key word here is just because. All right, so two entities, just because. Or a member of key management personnel in common. So the thing is that just because they are not a related party, just because they share a director or a key management in common. That the focus is that that person must be doing something, all right, related to between them, all right. So that is that. They must be having a transaction between them. Okay, so whereby in the transaction, the same person is controlling staff or having significant influence in there. Okay, so please kindly take note of that. So just because they have a key management personnel doesn't mean that they are a related part. They are related parties. All right. So please take note of that. Take note of that. Again, we have a joint venture, two joint venture or two companies in a joint venture, just because they share a joint venture control. Just because they share a joint venture control. And what do we mean by that? Just because they share a joint venture control. So uh uh like let's say company A and company B has come together. It's a joint venture, but they are going to do a business venture. So as far as A and B are concerned, they don't transact within themselves. They don't do anything within themselves, but they just came together so that they can win a government contract. Okay, so if that is the case, then it means that just because they have a joint venture doesn't mean that they are related party transaction or they are related parties. I.e., there is no connection between them apart from the fact that so they go and win the contract. Company A will be performing as part of the contract. Company B will be performing as part of the contract. They are distinct in performance, but in terms of going for the contract, they had to come together to win the contract because of, let's say, capability-wise, you get it, technical feasibility, capability-wise, all right? So please watch it very carefully. We are talking about two joint ventures just because they share joint control of a joint venture, right? So that is that. Then the last one that I can also talk about is that a customer or a supplier with whom an entity transacts significant volumes. The fact that they transact significant volumes doesn't mean they are a related party transaction. So if you have a customer or you have a supplier, which we deal with in significant volumes, let's say majority, higher percentage of your transaction are with that particular customer or supplier, it doesn't mean you are a related party transaction. All right. So please take note of these three things. So, a customer or a supplier. So, a customer or a supplier with whom the entity transacts a high significant volume of business. So you have to be very careful about how these things. You have to be very, very careful about these things when you are talking about related parties. All right, not just because they share a director. All right. So in terms of applying related party, you must look at substance over form. Substance over form. So apply substance over form in deciding if two parties are what? Related. Please, this is very, very important. So don't just look at the fact that they just share directors. What is the substance of the director in both institutions? All right. So please, the key is that apply substance. All right. That is that. Now, the last thing that we are going to look at in this standard, before probably we take a look at some questions, is what do you disclose? What actually do you disclose? Because we say related party transactions are not illegal, they are common. However, disclosures have to be made. So, what particular disclosure are we referring to? So, I'm going to split it into three and deal with it. The first part, I'll be talking about the key management personnel, what you should be disclosing, what the standard says you should be disclosing. Then all the others, related entities, apart from the key management. Then the last one, I will talk about government-related entities, government-related. So the disclosures. All right. So if you're watching this video, you have to pardon me because my pen is slow in writing. I think it's because of the internet. All right. So the first one that we are going to look at is the key management personnel. All right. What do we need to disclose about the key management personnel? So when it comes to the key management personnel, we are supposed to disclose any employee benefits with them. So we start with the short-term benefits, their salaries. All right. That is why it came out that even our commissioner general salary would come out because he's a key management personnel and his salary is very important to the state. So people are interested. So key management personnel, their short-term benefit has to be disclosed. Again, their pension benefit entirely has to be disclosed. Their pension benefit, if they go on pension, short-term includes salaries and bonuses. When they go on pension, everything must be disclosed. Not only that, not only their pension, but any termination benefit. Any termination benefit must be disclosed. And any other share-based payment schemes must also be disclosed. So as for them, these things must be disclosed. All right, they must be disclosed. Then we come to number 2, the others. Others, we mean the entities. So when it comes to the entities, we are going to list the things that must be disclosed. But because of the pen's delay, I'm going to talk about it. So as and when it comes, then I write it for you. All right. Number 1, we are going to talk about, so you have to disclose the nature of the relationship. It's very, very important. What type of relationship is that? Is it a parent-subsidiary relationship? Is it a joint venture relationship? All right. So that is what you must disclose. Is it an associate relationship? The entity must disclose what? The type or the nature of the related party relationship. Then number 2 is any transaction, the transaction that actually happened within them. The transaction must be disclosed. Is it a sales transaction? Is it a credit transaction? What transaction is that? It must be disclosed. And so when you are disclosing the transaction, another thing you must endeavor to disclose is the amount in the transaction. The amount in the transaction. So the amount. And if there is any outstanding balance, it has to be disclosed. If there is any discount that you give, it must be disclosed. All right. So that is that. Please bear in mind that the disclosure is regardless of whether you charge the price or not. Okay, so please take note of that. Take note of that. Then the last aspect of this that I'm going to talk about is the government-related entities. So for government-related entities, what you realize is that they are exempted from the disclosure of the transaction balances. So listen carefully. So what do we talk about government-related parts? So look at GCB Bank and look at which bank is that? CBG Bank. These are government banks. If you are an entity, you are related to the government. These banks are related to the government. And so therefore, they are not required to disclose any transaction, balances of the transactions, the amount of the transactions. They are exempted from that. But they are supposed to disclose the relationship type of the related party transaction. So what type of relationship is that? So we will need details of the type of the relationship, the nature of the relationship. Even though disclosure is exempted on transactions and balances, the relationship type must be disclosed. And as most importantly, it also says that the government agency must also detail the individual transactions, individual significant transaction, not every transaction, individual significant transactions, and cumulative aggregate significant transactions must be disclosed. But bear in mind, they are not supposed to disclose what? The transactions, all transactions, and what? Balances. Bear in mind that. So that part is very important. Okay. So when you see a question, know where you are the angles with which you are dealing for. So we said with the others, we talked about the nature of the related party relationship. Then 2, we also talk about the fact that the description of the transaction. Then we also talk about the amounts and outstanding balances. Okay. And again, any discounts must be disclosed. Then bad debt, irrecoverable debt must also be what disclosed with that related party transaction. And lastly, we also said that when it comes to government agencies, government related party transaction, you being related to government, you must disclose the type of the relationship, but you are exempted from disclosure of the transactions, all transactions and balances. The transactions that you are required to disclose, details of the transaction, not necessarily the amount, details of an agreement can be disclosed, and aggregate significant transactions too must be disclosed. So ladies and gentlemen, that sums up IAS 24. What we need to do now is to just take a glance of some questions. Okay. All right, so let's look at some examples in this question. All right, so we have the first question that says that money is an entity specializing in importing of wide range of non-food items and selling them to retailers. Aquil, money CEO. So you see that Aquil is a significant person in money and that entity. And Aquil is also the founder, the CEO and founder, and also owns 40%. So clearly, there's a significant influence. He's the founder. He has control, sort of. So he says that money's largest customer is Zico, who account for 35% of money's revenue. Zico has just completed a negotiation with money for a 5% discount. Now, the requirement of the question is just trying to tell us that if this thing's related party, should we classify it as a related party and disclose it? So you see clearly that this one, money, Aquil is a significant influence, and also, any transaction between them has to be disclosed. But this is just an introduction. But it says that money is the largest client. We said that a customer or a supplier with whom an entity holds a significant volume of transaction doesn't mean there is a related party. So this one, there is no disclosure. All right. So that is that. It says that during the year, Aquil purchased a property from money, which is 500,000. Money has previously declared a surplus of its requirement and had valued the thing at 750. So you can see that the thing is 750, but he's selling it at 500, and that is to Aquil. So Aquil clearly is somebody who has a significant influence or a key management personnel. So this particular one is a significant influence. So therefore, you do realize that this one is a related party transaction, and the amount must be disclosed. And also the type of relationship he has with him must also be disclosed. Any outstanding must be disclosed. Don't forget those things. Aquil's son, Sheriff, a director in a financial institution. So you see that this is a related, a close member of a key management personnel. You remember, if you remember the diagram that I drew, before you, if you saw it, that was part of what I drew. So there is a close member of a key management personnel. Where is the diagram? So this is the diagram. So we see key management, a close member. All right. So that is what you see. Zico, Sheriff is Aquil's son, so a close member of Chief Capital. During the accounting year, Chief Capital advanced 2 million to money as an unsecured loan, favorable at a favorable rate of interest. So you could see clearly that this 2 million too must be disclosed, and the nature of the relationship too must be disclosed. So that is all you talk about. Those are the things you talk about. We come to example 2. It is asking you to explain 2 reasons why it is important to disclose. Of course, the users of financial information need more details. They need to know this. I've explained to you that if the thing is 250, you sell it at 200, there must be a reason. All right. So the disclosure is very important so that users of the financial information can actually get a proper understanding of the financial position and the performance of the entities. It's very, very, very important. All right. So that part is very, very important so that they can, you see clearly that since there is a related party, certain transaction might be done in certain ways, and therefore it must be disclosed. The disclosure is also very important, especially when it comes to a business being sold. So if the business is being sold, you realize that the various parties that are related, the stakeholders, they are interested in their position, how that thing is going to affect them. Okay. So once again, related party transaction is like a transfer price. It's not illegal, but proper disclosures must be made. All right. So that is that. Then we come to question 3. It says that Bongo Designs is a parent of a small group. Its shares are stock market quoted. That's a listed company with many shareholders. Only one shareholder, Kwesi Boakye, is holding 5%. 5% doesn't amount to anything. It doesn't amount to any significant influence, nothing. Kwesi Boakye He said he holds over 5%. Akwesi Boache holds 20%. Now we are talking about something, because 20% means what? An associate. And it is what? A significant influence of shares in the, so that now he still retains his seat on the board, which is made up of executive directors, including himself and 2 non-executive directors, 4 executive directors. That's bad for corporate governance, because the nets should be more than the heads. All right, that is what we are told here. Akwesi Boache domestic life in partner. Akwesi Boache's domestic life in partner of 10 years, Abena Lamte, that's the kind of the wife, recently set up a company, and Gushegu Limited, in a textile industry with a friend, Akosia Pokia. Abena Lamte and Akosia Pokia owns 50%. So this one too, I spoke about it, a third-party joint venture. Third-party joint venture. I spoke about it when I was drawing the diagram. Third-party joint venture. It's very, very important. All right. So you could see, and it says that 50% of Gushegu, and the decisions are made jointly under the contract. Bongo Designs has 2 subsidiaries. Zabzugu Fabrics, which is 100% owned, and Binduri Textiles, which is 60% owned. All these things are controlled. The other 40% of Bundiri Textiles is owned by a single shareholder. That is significant influence. Innovative Sisala, which has 2 seats on it has 2 seats on Binduri's Textiles 5-member board. So you see, a key management personnel, one is here, one is here. I mean, that kind of thing. All right. He is also a person responsible for the finance at the group level, but not a member of the group's board. All right. Now, in accordance with this, identify the related party transaction in this thing about Bongo. So we have to pick the issues one by one. Number one, let's talk about Akwesi Boache. Akwesi Boache has significant influence, and any relationship must be disclosed, because he owns, per what we said, we read 20%, so significant influence, and he is a key management personnel. Abena Lamte too is a close member of Akwesi Boache, and so therefore that one too is what? A related party transaction. Then we also talked about the joint control. That one too is a third party joint control, and that one too is regarded as what? A related party transaction. Then when it comes to the Zabzugu Fabrics and the Binduri Textiles, they are related. They are related because they are in this. They are related because they are in the same group. They are the same group members of the Bongo Designs. So that one too is a related party. All right. So please take note of that. Then this year, Abdullah is the director of Zabzugu Fabric. So yeah, Abdullah too is a key management personnel at the group level. All right. So that one too is what do we call it? A related party transaction. But when you look at the innovative Sisala, the innovative Sisala is not a related party transaction because it does not have any significant influence at the group level. It's just that just because somebody share a director doesn't mean that. So please be careful of that. So it says that the other 40% is owned by a single shareholder, Sisala. Sisala, which has 2, so they share board of directors, but so it doesn't necessarily mean that. So what are the board of directors doing? Those ones amount to related party transactions. So please, the Sisala in this situation, even though the other 40% is held by that Sisala, you realize that it makes them like they are in the group, but you realize that there is nothing like having a significant influence at the group level. All right. So kindly take, they just share the board of directors. All right. So basically that is that. And this one talks about a GH Bank, which is a government bank. So you see, this is a government related issue. And it says that GH Bank has taken over was taken over by the government in recent financial sector by the Bank of Ghana. So GH Bank Limited does not directly trade with government controlled banks, but has underwritten but has underwritten the development of the national-owned postal services and newly created railway lines. The directors of GH Bank are concerned about the volume. So here, volume and cost of disclosing related party transactions because they extend theoretically to all government-controlled enterprises and banks. The directors require general advice. So when it comes to government-related, we discussed that when it comes to government-related, you don't need to really, you are exempted from what the disclosing the transactions and the amount. But herein, you must understand that anybody who benefits from that as exemption must go on to disclose the nature of the relationship. It's very, very important, the nature of the relationship. Anybody who does benefit from that must disclose the nature of the relationship. Very, very key. Very, very key. So you ask yourself, what is the nature of the relationship between them and the government? So you must disclose that one. It's very, very important. Very, very important. So the name of the government, the nature of their relationship. All right. Then when it comes to significant individual transaction, you disclose the details of the transaction. Then significant collective transactions, you disclose both quantitatively and what qualitatively. So it's not about all the transactions. It's not about all, but we are looking at significance and the nature of the relationship. All right. So basically that is that. So these are the things you talk about, then you are good to go. All right. This one too is talking about the fact that Trent is the Trent's company's finance director asks the accountant to record a cash. Okay, so this one is kind of an ethical issue. So look at it clearly. Trent finance director asked the accountant to record a cash of 3 million received from a client, which is from a customer. He said that the money he received from the customer, he should record it as a cash advance. It's from a customer. The customer's name is Benji as a reduction of their trade receivable. But why should he? So he received the money. He said you should receive the money as a cash advance. And he's saying that Benji is solely owned by Trent, finance director. So you see, the finance director, the accountant has seen as the arrangement signed by both the companies, stating that the 3 million will be repaid by Benji in 4 months' time. Now, look at this. Trent finance director asked the accountant to record the cash advance 3 million of money received from customer Benji, which is owned by the same Trent finance director. So it says that it says that the accountant has seen that an agreement signed by both companies stating that the 3 million will be repaid by Benji in 4 years' time. So, I mean, look at this. Look at 4 months' time. The finance director argues that the proposed accounting treatment is acceptable because the payment has been seen as a cash advance in the case of Benji company. Has been seen as what? Cash has been made in advance in case Benji's company wants to order goods in the next 4 months. However, the accountant has seen no evidence to any intent from Benji to place order with Trent. So you see, related party transaction, he has to disclose this money. Proper transactions must be recorded. He has to disclose that money. All right. So that is what you go through and do. There's nothing calculation. You must understand what IAS 24 is trying to say and just apply it in all the questions that you face. Thank you very much. God bless you. And the next time we meet, we will discuss IAS 34. Have a great day.